Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 15th. We got a lot of data to go over today, so we're going to jump right into it. And we'll start off with the weekly jobless claims here. So last week we had 258,000 people apply for unemployment. The forecast for this week was at 200,000. Still relatively low. We exceeded a little bit, but it's still relatively low at 254,000 people applying for unemployment. Now we got some inflation news with the Consumer Price Index, also known as the CPI. So back in October, we had a 0.4% increase in the CPI, and then we had a 0.2% forecast, and it came in in expectations at 0.2%. Same thing when you strip out the food and energy that can create the volatility in the numbers here. We got what they call the core CPI. So back in October, instead of 0.4, we had a 0.1% increase, and we had a forecast of 0.2%, and it did go up 0.2%. So year over year for the CPI, we're at 2.1%. Now, that's a little bit higher than what the Fed's expectations or wishes. They want to keep it about 2%. But they look primarily at the PCE, or the personal consumption expenditure. So that's currently at 1.7. We don't have that data today, but just to give you an idea as to the different gauges out there. So, and then we'll touch this on a little bit about inflation here, but we'll go through this first. We got manufacturing numbers here. We got Empire State Index. This is the manufacturing in the New York region. So we had a barely above expansion level in November. We had 1.5%. So basically, on this type of index, we look at anything below zero, obviously, is a contraction. Anything above zero is considered expansion. And it jumped all the way up to 9 here. Now, go to Philadelphia area, we got manufacturing in the Philly Fed Index. We had a 7.6, so it's a decent number in November, and the forecast is supposed to go up a little bit to 10, and it jumped way up to 21.5. So a huge number right there. This is probably, a very good number here. So we're getting some good manufacturing numbers for the month of December out of New York and Philadelphia area here. Market PMI also kind of shows a slight improvement. This is flash PMI. This is also manufacturing number. Anything above 50, and this index is expansion. Anything below is contraction. So we go from a 54.1 to a 54.2 from November to December here. So a slight increase overall here. Home builders index. This is a confidence level for home builders out there, and as you can see here, we go from a 63 all the way to 70. So really good number right there. For home builders, and a lot of this, again, we're just seeing more and more positive news since the election came in with Donald Trump's surprising victory, that the stock market, everybody's really liking things and feeling more optimistic, and they feel that he's going to fulfill a lot of his promises once he takes office of investing into our infrastructure, creating more jobs, creating more corporate growth with the corporate tax cuts, consumers having more money because they're getting tax breaks, and then of course they'll probably be spending a lot of that money. And a lot of this will also translate into obviously more job creations, more growth in the economy, as well as higher inflation. So that's why you're seeing the Fed raise interest rates. So they raised it on yesterday by a quarter point. So we'll touch that here in just a minute here. But the stock market's up. And a lot of this is all on the aftermath of FOMC. So basically, here's what the FOMC so they didn't surprise us with the rate hike. We did expect a 0.25% hike, and they did come out with that. Now, the dot plot map came in September. They expected about 2 rate hikes for 2017. This one came in, and it looks like it could be 3 rate hikes. They did say that inflation's showing some picking up, but they also showed job growth picking up. So there's a lot of positive news. So as a basis, the stock market's really kind of taking off. We're reaching psychological levels here, like the Dow at 20,000. They're thinking that maybe we could hit 20,000 by year end on the Dow. The yields, we already surpassed our initial psychological test, which was 2.5. Now it looks like we could potentially hit 3 by year end on the yields for 10-year treasuries. So those are all factors that are kind of playing into the markets and what's kind of building up for 2017 here. So let's go and see how this is impacting the bond market. So as you can see, we had a huge drop here after starting the day upwards before the announcement. Then after the announcement came up, and because if there's anything to talk about inflation, the bond market gets scared. So when they're talking about inflation rising, the bond market gets scared about that, because what happens is that inflation devalues the bond over the course of time, and of course nobody wants to lose money, so that's what happens. So so we dropped 78 basis points. We closed 78 basis points from where we left off on Tuesday, and which as you can see, we can imagine we did have a price for the worst. We had a couple price changes because it just kept going down, 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 down. Today we actually started off much lower too, and we're up, but right now we're about 19 basis points from where we left off yesterday. So we got worse pricing from where we even finished off yesterday. This is a pretty big dramatic change here, because we haven't been in this levels for a couple years now. This chart goes up to like maybe 2 years, and it's past that since the last time we've been in at this level here. So this is we could potentially still drop even further from what we saw a few years ago. That it's potential we could further drop again. So rates will go higher as a result of this. So we may see a slowdown in real estate. Possibly, it depends. It's all dependent where the prices are at, and also where the interest rates are at. So we did see a dramatic turn in where interest rates lie here for home prices here. All right, folks. So interest rates are a bit higher today as a result, and if you guys want to get more data or more information throughout the day, just go ahead and head over to Twitter. I do post updates daily on Twitter, and you'll be able to get the market close and everything else throughout the day of what's going on out there. And I could be fun at Mike Bjork. All right, folks, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.